Welcome to the deep dive. Today we're doing more than just crunching numbers. We're really peeling back the layers on a true titan of India's infrastructure, Ircon International Ltd.
That's right.
Our mission.
Mm-hmm.
To take their latest Q1 FY26 financial results and, well, not just report them, but reveal the deeper story. What they tell us about the company and, the booming Indian economy it helps build.
Exactly. And we've got quite the stack here. Their financial reports, board meeting outcomes, investor presentations, press releases. We've sifted through it all to find those surprising nuggets of insight.
The good stuff.
Yeah, the stuff that helps you truly grasp the bigger picture, moving beyond just the headlines to what really matters for this massive player.
Okay, so let's unpack this. Before we dive right into the financials, though, I think it's really crucial we understand who Ircon International Ltd. Actually is at its core.
Good point. So Ircon is a Navratna Central Public Sector Enterprise, a CPSE. It operates directly under the Ministry of Railways. You should think of it as a strategic arm of the government, essentially. Right. And while their main focus, obviously, is railways and highways, it's in the name. After all, just calling them rail and road barely scratches the surface. I mean, really.
Absolutely. Their expertise is incredibly diversified. We're talking, everything from specialized ballastless tracks, railway electrification, tunneling, signal, and telecommunication, even leasing locomotives.
And it doesn't stop there.
No. They're involved in commercial buildings, industrial, residential, airport runways, hangars, complex metro systems, mass rapid transit. They genuinely build the backbone of modern India.
And they've been around for a while. This isn't some new kid on the block. Ircon was established way back in 1976.
Wow.
But what's really remarkable is their recent path. Becoming a Navratna company in 2023, that was a huge milestone for them.
Yeah, and let's just pause on that Navratna status for a second. To put that into perspective for you, becoming a Navratna is kind of like getting a corporate superpower.
Ah, yeah, that's a good way to put it.
It grants them significant financial and operational independence. It lets them take on even bigger, more complex projects, make strategic investments without always, waiting for direct government sign-off. That agility must be crucial.
Oh, absolutely crucial, especially in the fast-paced infrastructure world. And speaking of trajectory, in 2024, they hit their highest ever turnover. That tells you something about their growth.
Definitely.
Their scale is just genuinely impressive. Think about this. They've executed work on over 5,500 track kilometers of railway.
Wow.
Over 9,600 running kilometers of railway electrification. Nearly 7,000 kilometers of roads and highways. Then you've got 1.56 million square meters of buildings, 157 kilometers of tunnels, 159 bridges.
Just imagine the sheer engineering and logistics involved in projects like that. It's mind-boggling.
It really is. And their reach isn't just limited to India either. They've done over 130 projects in 25 countries.
25 countries?
Yeah, with current operations mentioned in places like Malaysia, Nepal, Bangladesh, South Africa, Algeria, Myanmar, Sri Lanka, and domestically, 405 projects across various states. This global footprint really speaks volumes about their capabilities.
And their reputation.
Indeed. And the rankings back that up. 232nd on the USA ENR construction list, 192nd on Fortune India 500 late last year, 132nd on BS 1000 revenue just this March. These aren't just numbers. They show Ircon standing as a major global construction force.
And behind all this, of course, is a highly experienced leadership team. You look at their profiles, vast experience in civil engineering, corporate finance, project management, deep knowledge of railway and highway infrastructure. That mix is absolutely critical.
You need that blend to manage projects of this scale and diversity. Precision is key.
Okay, so with that context set, let's get into the heart of today's deep dive, the Q1 financial results, the quarter ending June 30th, 2025. These are unaudited, but they were reviewed by the audit committee and approved by the board just recently, August 6th.
Right, ready to jump in.
Let's do it. Let's start consolidated the big picture, Ircon plus all its subsidiaries. Operating revenue came in at Rs 1,786.3 crore for Q1 FY26. What's your initial take on that figure, especially looking at the trends?
Well, that's a key number to watch, and yeah, it does show a notable trend downwards this quarter. We're seeing a year-on-year decline compared to Q1 last year of about 21.9%.
Okay.
And an even sharper drop compared to the previous quarter, Q4 FY25. That's a 47.7% decline quarter-on-quarter.
Whoa, nearly 50% down from Q4. What's driving that?
For a project-heavy company like Ircon, Q1 can often be a bit lumpy. It's often when new projects are just starting to ramp up, or maybe some large previous projects have just finished their major billing cycles.
Right, the ebb and flow of big projects.
Exactly. So this dip isn't necessarily a red flag pointing to some systemic issue. It often reflects the very nature of this large-scale infrastructure work. The real insight will come from seeing how their order book translates into revenue over the next few quarters.
That's a really important distinction to make, understanding that project life cycle. So, okay, given that revenue dip, how did their operational profitability, their EBITDA, hold up?
Right. EBITDA earnings before interest, taxes, depreciation, and amortization. It was reported at Rs 323.9 crore. Now, this is down 9.4%, both year-on-year and quarter-on-quarter.
Okay, so a smaller drop than revenue.
Exactly. And what's interesting there is that while the top-line revenue fell quite sharply, EBITDA didn't fall nearly as dramatically. Their EBITDA margin, for instance, actually stayed pretty robust at 17.1%.
17.1%. That suggests they managed costs relatively well.
I think so. It suggests they've kept a decent handle on operational costs, even with those revenue fluctuations. That resilience is significant.
Okay, so moving down the income statement, what about profit before tax, PBT, and then the bottom line, profit after tax, PT?
PBT came in at Rs 211.5 crore. That's a decrease of 24.9% year-on-year and 19.6% quarter-on-quarter. And the PBT profit after tax was Rs 164.1 crore. That's down 26.8% from Q1 last year and 22.5% from Q4.
And that flows through to earnings per share, obviously.
Yep. EPS ended up at Rs 1.75 per equity share, face value of Rs 2. That's a 26.5% drop year-on-year and a 21.9% drop quarter-on-quarter.
Okay, so those are the consolidated numbers, the whole group. Do the standalone figures, just Ircon's core business, tell a similar story, or are there any interesting differences there?
The standalone figures pretty much confirm the overall trends. No major surprises. Standalone operating revenue was 1,664.2 crore. That shows a 23.7% decline year-on-year and a 48.7% decline quarter-on-quarter, very similar to the consolidated picture.
Right.
Standalone EBITDA was Rs 209.8 crore, down 14.7% year-on-year and 22.2% quarter-on-quarter. And their standalone Penta was Rs 150.6 crore. That's a 14.7% decrease year-on-year and a slightly larger 31.0% decrease quarter-on-quarter compared to consolidated.
Yeah, and the standalone EPS mirrored this at Rs 1.60 per share, down about 14.9% year-on-year and 31.0% quarter-on-quarter. So we're seeing pretty consistent declines across the board for this specific quarter, both consolidated and standalone. Putting these dips into perspective, what might they signify for a company like Ircon? You know, one that thrives on these huge long-term projects. Is this just part of the cycle, or?
I think given the nature of their work, it really highlights how a single quarter, especially Q1 for these project-based companies, can often be a bit of an outlier that doesn't necessarily define the whole year.
Makes sense.
And what's fascinating here, if you dig a bit deeper, is how the different segments contributed. Domestic operations are still the absolute powerhouse.
Right, that figures.
Yeah, they contribute significantly more revenue. Standalone, domestic revenue was over Rs, 1,635 crore. Consolidated, it was over 1,757 crore. International operations, in comparison, just Rs, 28.76 crore.
Wow, tiny fraction.
Tiny. It just reinforces their strategic focus on the Indian market, especially with this massive domestic infrastructure push we keep hearing about.
Yeah, that makes perfect sense for a CPSE under the Ministry of Railways. But let's talk about some of these joint venture dynamics you mentioned earlier. There are some really nuanced details here that offer quite a bit of insight into their operations, their transparency, how they handle these complex relationships.
Indeed. Take the Indian Railway Stations Development Corporation Ltd, IRSDC. Now, the Ministry of Railways decided to close it down, and its financials are being prepared on a liquidation basis.
Okay, so it's winding down.
Right. But Ircon's management states, and this is key, that they do not foresee any impairment in the value of their 26% investment in IRSDC. That investment represents about R62 crore of IRSDC's net worth.
That's a very specific statement, and you mentioned the auditors highlighted this as an emphasis of matter in their report, but didn't actually modify their opinion. Why is that significant? What does that tell us?
Okay, so when auditors issue an emphasis of matter, it's basically their way of saying, hey, reader, pay special attention to this specific point for full context. It's not a red flag. It's not a correction to the financials.
Got it. It's like a footnote with a spotlight.
Exactly. A footnote with a spotlight. It flags a unique situation, like a JV winding down, that's important for a complete picture. But the fact they didn't modify their opinion means they ultimately agree with Ircon's overall financial reporting. It tells us Ircon is being transparent about a complex situation, but the auditors trust their assessment and the underlying health of the core business. It's about careful disclosure, not hiding a problem.
Fascinating distinction. Okay, what about Baster Railway Private Limited, another JV, right?
Yes, for Baster Railway, the Ministry of Railways has approved its closure too. Its assets and liabilities are being transferred back to the ministry. Legal formalities are underway there, another example of a project reaching its planned end.
And Mahanadi Coal Railway Limited, MCRL, similar story.
Pretty similar. The decision's been made to hand over Phase 1 and Phase 2 of the MCRL project back to the Ministry of Railways. Again, legal and pricing details are being worked out, and importantly, Ircon states, again, they don't foresee any impairment in this investment either. It shows a sort of planned unwinding of certain specific, perhaps older projects.
Right, managing the portfolio. And finally, Ircon Soma Tollway Private Limited, or ISTPL. You said this offers a crystal clear example of how project life cycles hit the financial reporting.
Absolutely. Their toll collection rights are scheduled to end on April 21st, 2026. That's when their concession period expires. Because this definite end date.
Ah, okay.
ISTPL's financials have been prepared on a basis other than going concern.
Okay, other than going concern, what does that accounting phrase really mean for you, the listener? Why is that important?
That phrase, other than going concern, is highly significant in accounting. It basically means that the specific entity, in this case, the ISTPL joint venture, isn't expected to operate indefinitely as a business forever.
Because it has a known end date.
Exactly. Because it's a planned closure, due to the concession period ending, their financials are prepared assuming liquidation and asset handover, not continuous future operations. It just perfectly illustrates how these project life cycles are built into the financial reporting for long-term players like Ircon. It's standard, transparent practice when an entity is nearing its planned end.
Okay, that clarifies those JV situations really well. So while these Q1 results show that dip we discussed for a company like Ircon building national infrastructure, isn't the real story often in their future pipeline? What does their order book look like right now?
That's a great question, because you're absolutely right. The order book dictates future revenue visibility. And their total order book as of June 30th, 2025 remains very robust. It stands at 20,973 crore.
20,973 crore, that's substantial.
It is. This is the bedrock of their future earnings. It's a clear signal of sustained work ahead.
So let's break that down strategically. How does that massive order book split up? Sector-wise, geography?
Okay, sector-wise, railways dominate. No surprise there. It accounts for R's 15,724 crore. That's a whopping 75% of the total order book.
75%. Okay.
Highways follow with R's 4,234 crore. That's about 20%. And then other miscellaneous projects make up the remaining 5%, around R's 1,015 crore.
And geographically? Still mostly India?
Overwhelmingly. Their core market focus is really clear. 90% of that order book is domestic. Only 10% is international. It just reinforces their strategic positioning within India's infrastructure boom.
Right. And how did they win these orders? Was it mostly competitive bidding, or were they nominated for these projects as a CPSE?
It's a strong mix, actually. A solid 63% of their orders were won through competitive bidding.
Okay, so they're winning head-to-head.
Exactly. But 37% came through nomination. This balance is important, I think. It shows not just their competitive edge in the open market, but also their trusted relationship as a government enterprise that gets tapped for critical national projects.
So what does this all mean for you, our listener? This huge order book provides really clear revenue visibility for the coming quarters, maybe even years. It shows that despite that recent dip in Q1, the company has a substantial backlog of work. That lays the groundwork for future growth, future earnings. It's the fuel in the tank.
Absolutely. And beyond the immediate numbers, there were also some corporate governance updates noted in their filings. These kind of underscore Ircon's commitment to robust oversight. For instance, Mrs. VAP and Associates have been appointed as secretarial auditors.
Ah, okay. For how long?
For a 5-year term, actually, from this fiscal year, FY25-26, right through to FY29-30. It's subject to shareholder approval, of course.
Mrs. VAP and Associates, they have a good reputation.
They seem to. Their key person, Mrs. Parole Jain, has over 14 years of experience, and the firm itself acts as secretarial auditors for other well-known listed PSUs. Think Railtel, MMTC, Engineers India Limited.
Okay, so that speaks to the quality of their internal controls and oversight.
Seems so. Additionally, Ms. Banyapathiya Bhaumick & Co. were reappointed as cost auditors for this fiscal year, FY25-26. These appointments just reflect ongoing efforts to maintain solid financial oversight and compliance. Standard, but important.
But really, when we talk about Ircon's long-term prospects, the massive overarching opportunity here is India's infrastructure boom. It's genuinely undergoing what they call a significant and promising transformation.
Precisely. And this transformation isn't just, happening by itself. It's being actively driven by strategic government action, increasing private sector involvement, and just the sheer pace of urbanization.
Right.
And if we connect this to the bigger picture, remember the union budget for 2025 allocated a massive RS, 11.21 lakh crore, specifically to capital expenditure, CapEx.
11.21 lakh crore. That's an incredible amount of capital and commitment.
It's a direct, unprecedented push for infrastructure development across the board. And there are key initiatives driving this, creating this huge pipeline for companies like Ircon. You've got the expansion of the national infrastructure pipeline, now up to over 13,000 projects.
13,000.
Yeah. Development of 100 PM Gati Shakti cargo terminals for better logistics, 3 new railway corridors under the same PM Gati Shakti plan. Plus, support from the National Logistics Policy, Haritmala for roads, Sagarmala for ports.
It's a multi-pronged attack, really.
It is. And then there's urban renewal, Pradhan Mantri Awas Yojana for housing, the Smart Cities Mission, better public transit like Metro Rail, and the Namal Bharat regional rail projects. This sustained government-backed push just creates fertile ground for growth in this sector for potentially decades.
Okay, let's zoom in specifically on railways and highways, since those are Ircon's absolute core areas. What's the outlook there based on these reports?
Well, the union budget specifically allocated INR 2.65 lakh crore just for Indian railways.
2.65 lakh crore, just railways.
Just railways. They also have an ambitious target. Install 30 gigawatts of renewable power capacity by 2029-30. And they project needing something like 35.3 trillion. That's about $545 billion by 2032 just for adding capacity and modernization.
Millions.
Trillions. It really raises that important question again. How do you balance this massive long-term national development outlook against short-term quarterly results for a company like Ircon, which is so deeply tied into it? It suggests these quarterly fluctuations might just be minor blips on a much larger, longer upward curve.
That's a really insightful point. What about highways? Similar scale of investment.
Also huge. The budget allocated INR 2.87 lakh crore towards road transport and highways. And there's the ongoing development of 8 major national high-speed corridor projects. That's over 900 kilometers costing over 50,000 crore. The investment is definitely not slowing down there either.
It really seems like Ircon is strategically positioned to leverage these just colossal opportunities. Despite any quarterly bumps, right? Their integration with government plans, that Nratna status giving them agility, the robust order book, it all points to them being uniquely placed.
I think that's fair to say. They're uniquely positioned to capitalize on India's infrastructure ambitions.
We've really taken quite the journey today, haven't we? We started by dissecting the raw numbers of Ircon's Q1 FY26 performance.
Right, understanding why those year-on-year and quarter-on-quarter dips aren't necessarily a long-term alarm bell.
Exactly. Then we went through the detailed breakdown of their really strong order book, which signals that future growth potential.
Yeah.
And those intriguing nuances of their joint venture statuses.
Like the emphasis of matter and other than going concern, clarifying what those mean, and then zooming out to the massive overarching opportunities in India's infrastructure sector, driven by all that strategic government investment we talked about.
Yeah, seeing how Ircon, as a Navratna CPSE, isn't just another company, but really a critical engine, deeply embedded in that whole national development agenda.
A key player.
So what does this all mean for you, our listener, as you think about a company like Ircon? Here's maybe a final thought to mull over. In an economy like India's, going through such rapid, huge infrastructure transformation, how does a company's specific status, being Navratna, having that direct strategic link to the Ministry of Railways, how does that uniquely position it to navigate short-term financial bumps while still capitalizing on these immense long-term national goals?
And maybe what might Ircon's journey, its current situation, suggest about the broader trajectory of India's economy as a whole? Something to think about.
Definitely food for thought. Think about that until our next deep dive.
Until next time.
Thanks for joining us.